What's going on, everyone? Lawrence from Financial Think here, Thursday evening live stream, back once again. Let me know if you can hear me okay in the comments. Today is February 10th. We have had an interesting day in the financial markets. It was one of those days where people were really waiting for these US inflation numbers to come out. And we're going to talk a little bit about that today. We'll talk about some peer-to-peer lending news. Connective Landing, one of the new entries into the peer-to-peer market, has decided to shut up shop very quickly. So I think a lot of people were quite surprised about that. I'll talk a little bit about Easy Money. It's a company that I get asked a lot of questions about. And we're just going to have a quick look at the website, some of the statistics, see what we think about that. We look at Bondora. We look at, what else? A little bit of crypto news. I need to make a trade, though, today. So we're going to start with that. But if you can just do me a favor, please hit that thumbs up for me right now. Get it out of the way so I don't have to nag at you for the next 49, 52, 58 minutes, however long the stream goes for. And thanks again to every single person that has become a Patreon subscriber. I very much appreciate your support. Every little bit helps, of course, the channel. And to keep the Financial Thing website going, let's say hi to everybody in the stream because we got a lot to get through today in an effort to keep it under an hour, which I always try to do, but never seem to make it. Hello, Annabelle. Hola. From Spain, coming live and direct. Hope you are all thriving and raring to go. Yes, we are. Hi, Paul Bagworth in Kenilworth. Chap, of course, in very, very cold, colder than cold, the coldest cold that was ever invented. Accrington. Colin Perry is in the Peak District. Alan Stratford is here, of course, and Mark Mason. I need to come up with nicknames for everybody. I don't know. Double M. You are now Double M Mark Mason. Robert Pates is here from Crete. So I don't want to call you Greasy Robert because that sounds a little weird. But since you're coming from Greece, we need to come up. Maybe we'll call you Crete Rob. Stephen Hale from Nottingham. Paul New in Stockport. Humming my tune. What is that tune? Mike Powell. Hello. Nice to see Lawrence. Your starter for 10. Who is the new 9th loan pad partner? You completely got me. I have no idea. So you could tell me what that is. I must have missed that one, of course. Peter Vince is here in Leatherhead. Chap, thanks for the feedback on the sound. John Day in Nottingham. And Alan Brooks is here from a chilly Pinner, Middlesex. And David Dawson, Double D, is here, of course, joining us. We Dividend Dave call you because you are very, very well informed on UK dividend stocks and shares that you like to delve into. Mike Powell says, I have to be the Right Honorable. We can call you the Right Honorable. I think that's a good name for you, Mike. Rob the Greek, excellent. Yeah. If you have a good nickname for somebody in the stream, come up with it because I'm just gonna start using nicknames. Maybe I'll have to come up with one too. Anyway, let's get started. One other little thing. We are gonna start doing a Tuesday evening stream that is going to be focused on probably cryptocurrencies and maybe alternative investing aside of peer-to-peer lending, maybe some stock stuff too in there. Just maybe we can make the stream a little bit shorter. And we do have quite a lot of people that watch it on catch up. I'm thinking maybe an hour is a little bit too long. So I want to try to keep it to 40 minutes, maybe half an hour to 40 minutes on a Thursday. So that's the plan. We'll do a Tuesday stream at 7:30 p.m. and one continuing on Thursday. As long as I'm alive and I can continue to do it, which hopefully be for some time to come. Let us get right into what is going on. Again, please check out the Financial Thing website if you haven't in a while. I am in the process of doing some updating on some of the articles and reviews. There's a lot of information. It takes a lot of time. So thank you for your patience. A lending crowd here has been accredited for the recovery loan scheme, and they will offer loans from £25,001. The one is very important, to £500,000 with terms of up to 60 months with no early repayment fees. This is our friends up in Scotland who have paused their retail peer-to-peer lending. Personally, I don't expect them to continue peer-to-peer retail lending anytime soon, if ever. I wouldn't be surprised if they completely stop doing retail peer-to-peer lending to chase the money, which is probably in the government-backed lending. And also in other news, then they announced that they have secured a £100 million funding deal with Barclays Bank and a large global investment firm to support investments into SMEs, small and medium enterprises, which they will be able to lend through the RLS. Lending Crowd has been one of those companies that I have dabbled in very early in my peer-to-peer lending days, but had some issues with defaults. And since I was doing assets capital at the time, I thought, I really don't want to have too many peer-to-peer lending investments that are lending to small and medium-sized businesses, because I think it's a very, very difficult space to get right, especially coming from a lender's perspective. I mean, picking out good business loans is very, very difficult. So I ultimately ended up stopping lending through Lending Crowd. Not to say they're a bad company or anything, it just wasn't for me. But they seem to be going towards government-backed loans and moving away from retail peer-to-peer lending. Let's see. Unbolted defends the viability of the pawnbroking peer-to-peer lending model. Now, this comes along, obviously, with what's going on with Connective Landing closing their doors, which we're going to look at in a moment. Now, Unbolted remains the only peer-to-peer lending company out there. Before, there was several. We had MoneyThing, we had Funding Secure, and there are some other companies that were doing some pawnbroking-based lending, but those were the two main ones. And now Unbolted becomes the only company left after Connective Landing exits the market, goes into wind down. So they have been saying that they feel the market for peer-to-peer lending remains strong within a pawnbroking model, and they concentrate on the best, most liquid assets, for example, gold, fine watches, and whatnot. And if you are an Unbolted investor, you'll see these emails coming through frequently, which says, hey, this asset is going up for sale. And these things tend to move very fast. They're not like properties that takes months or years to recover. These pawnbroking loans can be recovered very quickly, which is one of the major advantages of doing pawnbroking lending, which I think is a pretty cool thing. So they are defending and saying that they continue to lend. They continue to have a good user base of borrowers and lenders, and they have repaid or renewed 5,126 loans with a cumulative loan value right here of £35.1 million. So, relatively small in the grand scheme of loan books and peer-to-peer lending companies in general, but 35 million is not anything to sneeze at. So they continue to really stay the course on what they're doing, and hopefully they will be able to continue with their track record of 100% plus recoveries, which means they have managed to recover 100%, and in some cases more than 100% of loans that they've put through the platform, which is really, really impressive, because they've been going for a few years right now. They're not particularly new, so they do have a pretty good track record, and I continue to like what Unbolted is doing. So let's go to Connective Landing. This for me, it was a pretty shocking wind down news. I was not expecting this, and actually I'd reached out to Norman Akram on LinkedIn to try to get him to come on the stream, and then I'm not surprised then that he wasn't very responsive, because then they released this press release that thank you for Keith Hansen for putting this on the Facebook group, which if you haven't joined, come join the Financial Thing Facebook group, which you can find obviously. Dear Lender, Connective Landing Limited was launched a year ago, and in that short time, our focus has been to pursue the growth of our pawnbroking loan book over commercial property lending. Having successfully completed and funding several loans on our platform over the past several months, the board of directors at Connective Landing have reviewed the current market and the viability of operating a peer-to-peer lending model within the pawnbroking sector. After much internal deliberation, we, the board of directors, regret to inform you, our lenders, that the platform will wind down with immediate effect. We wish to state that this has not been an easy decision, but one we feel is best for industry and lenders. I don't really have any information on exactly what their wind down looks like, presuming that everybody is going to be in a loan wind down situation. That means as the money comes in from the loans, the investors will be paid back. Hopefully there's no financial issues in the background that we know of. Likely what Connective Landing discovered is they were kind of new as a company into the field, even though I think people that were working with Connective were experienced in the pawnbroking side. But unlike Unbolted, which seems to have this regular stream of borrowers and lenders, and they've been able to keep a pretty good balance between how much money is coming in from lenders, how much is going out through borrowers. They've been able to keep that balance, and I think it's something that peer-to-peer lending companies really, really struggle with. Sometimes they just don't know how much money they're going to have to loan out, and it can become very difficult if you don't have backup reserves or a credit line or some way to lend out money that you don't have enough from lenders. Somebody comes in for a loan that you need cash, you don't have it. It can become a difficult balance. And the other thing too is maybe Connective Lending doesn't have that borrowing source that maybe Unbolted has. Maybe they don't have that customer base within the pawnbroking field, and they didn't see there was enough loans possibly coming in to keep the business going. I mean, these businesses are not cheap to run. Getting your FCA is expensive, the regulatory things that have to be taken care of, and the fees. Also hiring people, paying the directors. You got to make enough money to keep the business afloat, and they obviously looked at it and said, we are not able to do that, unfortunately. So that's unfortunate. So another one bites the dust. I can't play the Queen song because I don't have it loaded up, but another one bites the dust on that. A lot of questions about Easy Money. They have passed 150 million pounds in their lending milestone. They have loaned 150 million pounds to property professionals over the last 4 years. And now they hope to get to that 200 million pound magic lending milestone by the end of 2022. The lender has seen no defaults, and its investors have never lost a penny. Let's look at Easy Money. There was a couple of things that I noticed about. First of all, they obviously have the branding, which looks very much like EasyJet. That font, that cartoon font that they have. I've had a lot of good feedback about Easy Money. Now, here's the thing right here that I think might be off-putting to some people. You get a 3.08% target rate if you loan £100 or more, which, it's kind of very similar to what LoanPad is offering, but I think honestly LoanPad's product is a little bit better just because LoanPad has a really good positioning of where they are if something happens with the defaults. Easy Money is kind of your traditional first charge, second charge type company. So here you can grab yourself 4.03% target rate. You got to put in £10,000 or more, which I think LoanPad wins in that respect, is to get their 4% rate. You don't have a minimum of 10 grand. Then if you want to get into this high net worth side, you can get up to 6% max, but you got to put in 100 grand. So I think that really eliminates a lot of investors out there who are going to be able to get that target rate of 6%. And then the £20,000 premium plus, which is kind of your mid range at 5.0%. So interesting. I'm not sure that for me personally 3% really is that enticing, because I think LoanPad offers the same type of thing. Now, you do have a bigger company backed by, obviously the Easy brand. I don't know how mutually exclusive it is, but they seem to have some kind of deal going with the Easy brand. I was going to look at the statistics on what their loan book looks like. The statistic page is a little bit limited, to be honest, but here's what I guess most people are really interested in. Down here, you've got these default and arrears statistics of 0% across the board, so no actual defaults. That's pretty amazing. 2020 the same, and all the way back to 2018, actually nothing has gone into arrears. So great track record. We'll say that about them. Overall performance, you can see here, the bridging side, they have an average loan of 1.35 million. So they do have some really large loans with average loan to values of 46.4%. But here on the development side, their average loan size is 3.35 million pounds. So again, sizable loans, but they seem to have them managed very well. Average loan to value of 50%. You can see here the target rates have actually been very close to what they actually return. So target rate of the classic, which is the smaller account, the £100 minimum, what was it? Classic, 4.05% target, and actual rate of 4.06, and then the classic 2, which is the £100 minimum. So very close with the target and the actuals, even outperforming a little bit on the premium, which is now unavailable, which they managed to provide 7.35% over their target of 7.28. So they've generally performed pretty much like they were advertised in 2020. Let's look at 2019. Yeah, pretty much, again, actual rate similar or even more than the target rate. Be interesting to see what 2021 is like, because they did hit that COVID period. And then live loans. You can see some of the live loans here are big. I mean, look at this one in Lancashire, 11.9 million, but a very low loan to value of 34.2%, all first charge on this list. I don't know if they all are first charge, but you got a smaller loan here, 569,000. Then Essex, 7.9 million, loan term of 12 months, 5.61% loan to value, first charge, mixed use. It'd be nice to see on the statistics exactly how big their loan book is, because it doesn't show that here. So I have no idea how big the loan book is, but maybe worth looking at. Again, I think it's a similar product to LoanPad, probably on a bit of a larger scale here for easy money. But, for somebody looking to diversify, maybe another place to put money, and you don't mind taking the smaller percentage rates if you don't want to put in 10,000. If you want to put in anywhere from 100 to a little bit less than 10,000, then you're going to get 3.08%. But with the track record, it seems like it'd be a good place to look to diversify. Let's see what else. Bondora approaches 200,000 peer-to-peer lending investors. Now, Bondora is actually the very first peer-to-peer lending company outside of the UK that I invested in. Had a pretty rough time with the defaults. I think I picked out my own loans. It was very early on in 2015, and I had a rough time with the defaults, so I ended up just putting that one to bed and not bothering with it. It was kind of a pain to getting the money over in euros at the time. But they seem to really be moving forward with their investors at 200,000. They have said that their loan originations in January fell 14.7%. But they were still more than double the amount lent at the start of 2021. So that shows that they are growing. Finished loans make up the largest share of originations, going from 56.2% to 70.3% of their loan portfolio. And Estonian loans, 28.3%. Spanish loans 1.4%. Bondora is a very interesting, place to look. I've never really enjoyed their website. Sorry, Bondora. I think it's just not the best website to navigate around. But they do have different products that you can invest through. I've heard of some returns being super high. I've also heard of some people who have not done well in Bondora at all. Very, very much depends on what you happen to pick. But they say the average interest rate here is 27.8%. I mean, crazy, right? And then net return 7.5%. Average loan amount 2,600 euros. You see over here on this graph, they had this bad month. Was that the month or was that the year? No, this is just, I guess a bad year. Minus 13% annualized return. But from there, they got their act together. You can see that this peak, it was average return 20.84%, which is huge. Some of these people in Europe are just paying massive interest rates, so there is risk involved. Again, that's what I experienced, was picking the wrong loans out and having high defaults. As you can see, the interest rate over time has fallen as it has with the rest of the peer-to-peer lending, but you're also taking quite a lot of risk because you are dealing in European loans, and I think some of those can be more risky than ones that we're used to seeing in the UK, which is, I think, interesting that this net return for lenders is really decreased a lot. So I wonder too, is the risk and the reward really balanced now at this point? Maybe it was back here when you were getting 18, 20%, 18, 15, 16%, but now to get 7.49, I think you're taking on quite a lot of risk to do that. But you can see they've issued over 550 million euros of loans, and principal overdue 62 million. So they got about a little bit more than 10% principal overdue. So again, you see where that risk factor comes in. But if you are looking at a European platform, Bondora is one of the old school big boys. You've also got Mintos, but unfortunately people in the UK cannot invest in Mintos at the moment, or Mentos. Sounds like a mint. And there's a couple other out there which you could potentially look at, but I'm pretty gun shy when it comes to the European platforms. I am. It's just the truth of it. So that's just me. Let's see what else we have here. Speaking of that, European peer-to-peer lending market set for a 20% growth. They're predicting it's going to go up 20% in 2022. So a lot of people getting into the peer-to-peer lending game as an investor in Europe. I think this is an interesting website, top 70 crowd financing platforms by funding volumes. You can see here, last 90 days, Mintos right here, which is really more of an aggregator of loans, but they have funded 456 million euros of loans in the last 90 days, which is huge. I mean, really, really big. Look down here at Bondora, 51.45 million in comparison. So Bondora is doing a little bit less than 10, or a little bit more than 10% of what Mintos is doing. But if you want to see this data, you could go to peer-to-peer, p2pmarketdata.com, and it gives you some information about the different platforms and what their lending volumes are like. This is really important because when you have a high lending volume, you would think that the company is making profit, which is an important thing. You can see Cufflink down here on this list at number 17, 14 million euros. This is their total. Let's see, scrolled up, 192.9 million euros total lent. So yeah, some statistics about the different platforms. We got Capital Rise. I wonder if we could sort by country. Don't think we can. Let's see. Here we go. Countries. Let's look at the UK. Yeah, so here we go. Crowd property at number 15. 19 million euros lent over the last 90 days with a total funding of 217 million euros. So can we put it in GBP? Because it confuses me. No, I guess it doesn't work. But then Capital Rise. Look at our loan pad friends down here at number 30 with 15.5 million euros lent in the last 3 months. Then we get to the smaller ones. Able Rate, Blend, Lendwise, Landlord Invest, Axia, and Quadus. So you can see Quadus down here. I know that's something people have asked about, but Quadus, £690,000 loan book, so very small, and they've loaned 130 grand in the last 90 days. This could be considered an indication of how platforms are actually really doing. Whether they have good loan flow, obviously. I mean, we've seen Quadus is a very, very small loan flow. So if you're considering investing, come to this website and check out these numbers because it's going to give you an indication. Not everyone is on here, not all of the platforms, but it's going to give you a really good indication of how healthy the loan flow is for companies. Look at this, Capital Rise plus 999%. Plus, so we don't actually know what that number is, but they've lent 33.9 million euros over the last 90 days. So check that out. Rebuilding Society focuses on recoveries in a slow month. Yeah, I am not the biggest Rebuilding Society fan. I never have been. I've had some emails back and forth with the CEO over there who's always said, "Oh, you're not giving our platform a fair shake." I mean, sometimes you just go with your gut. Sometimes it's based on past experiences with these platforms and defaults that I've had some issues early on. Again, with Rebuilding Society, I was never really one who stuck it out a long time if I had problems with loans. I remember there's a trucking loan that I took on Rebuilding Society. I don't know if it was back in maybe 2016 that completely went up in smoke, and it just kind of left a bad taste in my mouth about the loan. But they say they've received £120,000 in capital repayments last month and recovered £61,186. But they did not put any new loans up on the primary market, which is concerning. I mean, when a company is not releasing any new loans, you do have to pay attention to that. Rebuilding Society said it received £28,718 in interest payments. However, the month was below average in terms of lender profit and platform net return with 2 new defaults. Rebuilding Society added it has 1.8 million in total capital still out on all loans, and of this 19.11% is in default. So if we look at those numbers, they're really small. If I'm reading this correctly, and I haven't looked at the statistics on Rebuilding Society, but £1.8 million in total capital out on loans is really very, very small. I don't know if that's their total loan book. If it is, it's concerning. But almost 20% of their 20% is 19.11% is in default. It has lent 16 million to small and medium-sized enterprises in its inception. That's a really small loan book. I mean, 16 million total in the years that they've been in business is small. So I'm wondering, what is Rebuilding Society going to do to move forward? One thing I will say is I do appreciate their transparency, that they are willing to put this information out there, because the numbers are really not good. If you think about it, you want to maybe see growth. And I think the number has always been 10 million. You need a 10 million pound active loan book to break even if your expenses are reasonable. So seeing that maybe their loan book is smaller is maybe concerning. So if you're a Rebuilding Society investor, please keep an eye on the statistics page. Maybe we should see if they have any statistics. Stats, here we go. Let's take a quick look. See what's going on there. You see the outstanding 000 late So obviously you can see with the risk here, this is, interesting that they're high risk. Obviously they have most outstanding. They're A-rated loans. They have a lot outstanding of those, about 30% of their 38 loans. Seems to be most of their loans comes in the higher risk of the C brackets. We got 5 loans late. 58 loans. 58 loans that are greater than 90-day late, and then some overall losses here. Look at the A plus, minus 13% total over, I would imagine, inception. Let's look at 2021. 5 loans late, more than 90 days. Still pretty high returns, net 19%. So obviously the risk is going to be a lot higher on these types of loans. So you are going to have some defaults. Just trying to figure out what their current loan book is. Let's see, bad debt. So here they're saying 23.8 million total funds lent. That doesn't really add up to the whatever that article was saying. It was like 16 million. But yeah, just keep an eye out if you are a funding secure investor. Keep an eye out on the stats. I think it's good to do that with any peer-to-peer lending company because things change very, very quickly in these companies. So our aim is to keep us on the right side of these companies and make sure that they are continuing forward. All right, what else? We're doing a lot of peer-to-peer today. 2 peer-to-peer property flat platforms developed. I've partnered on a development deal. We have Blend and Landlord Invest have partnered to fund a ground-up development deal in Clevedon, North Somerset. Blend has provided £1 million of development finance, and Landlord Invest has provided around 150K. It's very interesting to me that Blend needed that 150K. I mean, that's what, 15% of the total loan. I'm just wondering why they didn't get that from their in-house lenders. Maybe they didn't have it. So they're going to help developers acquire and develop a property in the seaside town and civil parish into 4 semi-detached 3-bedroom houses. Philippe Karadagi, he said, he's the co-founder of Landlord Invest, that Blend provided the senior loan and we provided the junior charger. Okay, so that tells us something, that Blend is the senior and Landlord Invest seems like they're in second position. So interesting. I don't think I've ever heard of Blend partnering up on a loan like that before, so pretty cool. Funding Circle has sold a package of defaulted loans. This is good if you are a lender and you're waiting to get money back on defaulted loans. So they packaged up a cohort of defaulted loans. It's a small cohort. What that means is they end up selling it onto usually a debt recovery company for a discount, and then they'll take that money and pay off their expenses and then return some of that money to lenders and investors. How much of it you're going to get back is questionable. I don't know the answer to that. But whenever they package these loans up, it's kind of better for them, because if you imagine they try to recover over a 5-year period, sometimes Funding Circle looks at loans and goes, we're just not going to be able to get this money back, or it's going to take years. So we'll just sell it on for a discount, try to get investors some of the money back. It'd be nice to know what those numbers are, exactly how much of a discount that package of loans was sold for. We don't know that. So we'll guess on that one. Maybe some news will come out in the future. Okay, big news today. The CPI was released in the US, and yeah, this was really not surprising to me, but these numbers are very, very concerning. 0.6% is the consumer price index inflation that rose from January 2021. So it was 6.6% lower in January of 2001. So you can see down here, or up here, in January, the CPI for all urban consumers rose 0.6% seasonally adjusted and rose 7.5% over the last 12 months, not seasonally adjusted. The indexes for all items, less food and energy, increased 0.6% in January, up to 6% over the year. So if we factor in energy and food, it's 7.5%. If we take out energy and food, it's 6%. So I've been harping on about this inflation on this stream for months now, saying, you know, it's never been transitory. This inflation is a big problem. Yeah, so the numbers, they are what they are. And I think the target was 7.2 is what estimates. People were saying it was going to be. It came in a little bit worse than that. The stock market seemed to take that okay at the beginning and then has now started to go into the red. It's very, very, very concerning. You know, again, this has a knock-on effect to the UK in certain ways, especially with the way the stock markets react. So if we look at the actual markets of what is going on right now, you got the S&P 500 at minus 6.1%, so pretty negative sentiment towards those inflation readings. FTSE was okay in the green of 0.38%, but I would take a guess tomorrow you're going to see the FTSE go into the red. Dow minus 1.4%. So, yeah, things are getting more expensive, and I've noticed it when I go to the supermarket and buy food. Things are getting more expensive. Certainly gasoline, petrol getting more expensive. So now the Fed has to decide what are they going to do to tackle this big problem, because it's not going away. And as we spoke about last week, they're going to have to either raise the interest rates and risk putting the housing market under strain. And then also stop printing the money, which they don't seem to want to do. There's been talk of tapering, but is the tapering happening? No, it's not. And then some of the other Fed officials have come out and backtracked on what they were saying is going to happen. But I fully expect to see an interest rate hike in March. And it's going to be interesting to see how the markets actually react to that. You can see here, look at energy. Look at the energy price change for the last 12 months, 27%. That is absolutely insane. So energy is getting more expensive. I know you're seeing it in the UK with the prices because I get texts about that. Everything is getting expensive. But let's take a look at the Trading 212 account very quickly, because I'm going to make a gamble trade, which is probably silly, but I just have a gut feeling. I don't have any real information on this, so please don't copy what I'm doing. But tomorrow's Zillow's earnings report, call, whatever you want to call it. Oh, as you can see here, we were at 15,411 pounds, so we've come up about 400 pounds since last week. Some of those oil and energy stocks still continue to fly. Let's take a look at Zillow. Which one are we doing? The Zillow group. Come on. Okay. Zillow is a very, very big company in the US, and their stock was absolutely flying high a year ago. Well, not even a year ago. You can see right here at their high, they were at $200. So this stock has absolutely gotten hammered. What happened with Zillow was they were buying investment properties in the US, lots and lots of investment properties, and they turned around and said this was a bad idea. They've estimated they were going to take several $100 million loss on these purchases, and they ended up offloading these houses. It was very fast. It was faster than Connective Landing, and they're shut down. So now you can see the stock's trading down 70% for the year at $48.87. So, as crazy as I am, I'm going to take a gamble that tomorrow Zillow is going to have a good earnings call, and this stock is going to do well. And again, this is a flutter. Please don't copy this. This is not financial advice. It's probably going to go tits up. Excuse my language. But we have some cash sitting in the trading 212 account. And this is a trading account, so this is what we try to do, maximize the returns. We have £4,300. Not willing to bet the entire amount on Zillow because I've definitely been wrong in the past on these trades. We're going to have a stab. Right now, we're going to take £1,500. Wish me luck. Hang on. Maybe I should consult the crystal ball. This could be a disaster. Hang on. See what it says. Yeah, I kind of feel like this is not giving me good, accurate information. So, you know what's freaking me out too? The color behind is red. What does that mean? Is that a sign? Anyway, let's go ahead and jump in with 2 feet. Close our eyes. Here we go. Bingo. All right, Zillow. So tomorrow we're going to see this number in the green because today it's 1.13% in the red. So technically we did get a discount. It's up 3% for the week. I think tomorrow we're going to have a good earnings call with Zillow. We're going to make some money off this trade. It'll be a very short in, short out. I don't plan on holding the stock long term. Let's take a look at the portfolio and see how it's doing. What is of interest? Well, the energy seems to be okay. The mining stocks here, this is interesting. CleanSpark making a run back up again. You know, we've been down here in the $6 range, all the way up to $9. As we see, the cryptocurrency market has rebounded, really brushing off these inflation numbers. There were people who thought that the cryptocurrency market was going to take a big hit today if those inflation numbers came in higher than what they were estimated, which they did, but it didn't happen. Bitcoin really brushed it off. So CleanSpark has come back up. I think we were over 50% down on this stock at one point. So now we've made 12% back on that. We're still in the red. Planning on hanging on to those. Then Hut 8 Mining, again, pretty much the same story as CleanSpark. We've come all the way from 582 back to 780. We were up at 830 at one point. Lloyd's is continuing to really stay steady. What did we put money in last week? I think we put money in Vermilion, up 33%. Tillow, a little bit in the red. I can't remember what we did on that. I think we bought some more of that last week. Palantir really still struggling. Occidental doing well. LPI, Laredo. So again, the energy stocks performing well. Diamondback, 20% in the green. Centrus has been the big winner. This is the one we took profits on. I took a lot out of that. It's still up 58% on the small holding that we have. So performing well. Again, hopefully this Zillow trade will add some growth. Are we actually up? Did we go? Look, you can see this live. We're actually up 8p right now. So maybe this is a good idea. We'll see. We'll report back next week. Maybe on Tuesday. A little bit of crypto news. Let's take a look at the market very quickly. Bitcoin holding its own up to 44,000. We saw this price all the way down in the 35,000 range. Everybody was saying bear market, Bitcoin's done, blah blah blah. This was when I was buying down here in the 30. I bought, I think, at the 35,000 range. Bought a little bit more at 38,000. So Bitcoin doing well, trying to hit that 1 trillion market cap again. Really, I was honestly expecting this price was going to tank today because of the inflation numbers, but alas, that was not the case. And Ethereum, it's really the two blue chips, what I consider the blue chips of the crypto market right now. So you can see here up 21% and 20% for the 7-day period. So performing very, very well. Had some big news this week. Russia has, after saying they were going to ban crypto, there was a lot of news out there, and they are now saying they are moving to recognize crypto as a form of currency in Russia. I mean, what a huge flip. And this legislation will be drawn up no later than February 18th and expected to regulate crypto as a form of currency. This is really what we want. I don't see regulation as a bad thing. I see it brings legitimacy into the crypto space, which I think is really what we need in the crypto space. So Russia moving forward to do that. Here's an interesting story for those of you who say, well, Bitcoin is full of criminals, and sometimes it is. These two fools, Mr. Liechtenstein, I think his name is, oh God, what was his name? I can't remember. Heather Morgan and some other guy whose nickname is Dutch. Oh, here, Ilya Liechtenstein. These guys stole a ton of Bitcoin from a virtual exchange, Bitfinex, which is an exchange that sells crypto. Back in 2016, they hacked it and they stole. I think at the time it was worth 70 million US, and now in 2022 it's worth $3.6 billion. So might have been the greatest trade ever. Steal it at 70 million, worth 3.6. Problem was they were stupid and they got themselves caught. And this is another argument, is to say, well, Bitcoin's used for money laundering. Yes, of course there are people that do stupid things with crypto, as there are people who do things with US dollars, pounds. But the interesting thing here, again, traceable. Absolutely traceable. So the Justice Department was able to trace all of these Bitcoins and seize them. Now, the Department of Justice has $3.6 billion of Bitcoin on their books, which usually what they do is they auction it off. I don't think they want to hold it. But these two fools, Liechtenstein and Morgan, conspired to launder the proceeds of 754 Bitcoins, and the feds were watching them. They got in trouble. They got caught. You can actually find these idiots on Twitter. Here's Mr. Dutch at Unreal Dutch. If you want to, take a look at his Twitter. This is the guy, one of the guys. He's now in some serious hot water. And this is his counter criminal right here. She is apparently a rapper, a white rapper, and she has some pretty funny videos. Her channel has actually been taken down because I was looking at it yesterday. Her name is Razzle Khan, aka Heather Morgan, but she makes funny rap videos, and now she's going to be probably going to prison for a really long time. So interesting. KPMG in Canada, big company, has added Bitcoin and Ethereum to its corporate treasury. So instead of holding cash, this monster of a company has decided they would buy Bitcoin and Ethereum to hold. So again, this is big news. And this is, like I've always said to you, if you're not a believer in cryptocurrency, you are starting to see the early beginnings of what this is going to become. And big companies like KPMG, Square, obviously Elon Musk over at Tesla, holding big amounts of Bitcoin as their treasury rather than holding US dollars, because inflation, the 7.5%, is eating away at any US dollars they hold. So they're holding Bitcoin. KPMG isn't one of the new ones. We have another news story, Kraft Superfood chain, Everbowl, announcing that it will be moving to the Bitcoin standard. So they will run its business operations off the Bitcoin standard and converting cash reserves to Bitcoin. They don't want to hold cash anymore because they understand about inflation. And then finally, there is a bill that has been introduced to let Tennessee, the state of Tennessee in the United States of America, is they want to be able to buy Bitcoin to hold on their state balance sheet. So again, very, very early days of what is happening in the cryptocurrency world, but these are all very, I think, important pieces of information and news that is coming out that I try to keep you up on. Let's take a look at that crypto, the trading tool. Look, wow, we are up 13 pounds and 61p. Is this trade going to really work out? It certainly could do. I mean, should we just cash out now? We're up 17 pounds and 55p. Wow. No, we're hanging on to the dear death end of this tomorrow. We're going to see what happens. The earnings call, by the way, is at 5 p.m. So we'll see what happens in after hours trading. I think it's going to be positive. I really do. Anyway, that's what I got for you for the news this week. If you enjoyed it, hit the thumbs up button for me. Subscribe to the channel, please. Helps out a ton. We'll do a Q&A. If you have any comments or questions, put them in the chat. And see if we can get out of here in under an hour. See, I'm going to go through quick. Who is the 10th lending partner? I'm interested to learn. Maybe I need to find out. Okay, Mike says he doesn't know. I will find out who the 10th is. Did I miss? Oh no, it's the 9th lending partner. I was going to say there were 8 last time. So let's see. Hi, Alan is here in Basingstoke. Invest 22. Nice to see you. Mike says easy money takes a huge spread on the loans. There you go. That's why the interest returns are small for lenders. Do you know what the spread is, Mike? Just curious. Alice says, I'm struggling to find a new peer-to-peer platform that doesn't have a minimum investment of £1,000. Yeah, maybe P-Lend. I don't know what their minimum is going to be. Paul New's been with easy money, no problems. Invest22 tried signing up to Trading 212. There is a wait list. Yeah, check out maybe etoro. I have a link down below. You can sign up for etoro. Does Cufflink still sponsor you? No, Cufflink is no longer sponsoring the financial thing. We had a 12-month contract, which has come to an end. And I will be finding a new sponsor because I like to give other companies the opportunity to sponsor this amazing content. But it was a good run with Cufflink. I'm very appreciative to everything that we have managed to combine and create amazing content together. So I still love the Cufflink guys. Mike says, rebuilding society have lost income from not being an appointed representative anymore. Yeah, for anybody that doesn't know what that is, basically rebuilding society was able to let other companies come under their regulatory banner, which they were getting paid for, but the FCA has changed that and now is requiring people get their own FCA regulation. Invest22, please, you are doing more peer-to-peer tonight. Why not do crypto and trading 2122 on Tuesdays, peer-to-peer on Thursday? Yeah, sometimes the peer-to-peer news can be a little bit thin. There's not always enough to cover, but I actually do like that idea. I think we'll do that. We'll do the trading 212 and the crypto on Tuesdays and then stick to peer-to-peer on Thursdays. And if, it's a little thin on the news, we'll figure out something to chat about. If you take out energy and food, you're going to get pretty cold and hungry, yeah. FTSE is flying this past year, surprisingly. Correct. Still not a fan. So we'll probably do some crypto staking stuff on Tuesday. I've been playing around with that and finding some pretty good yields on places that if you want to buy some crypto, you can stake it and get paid a decent APR. So I'm happy about that. Appreciate how to do that if you're interested. Paul makes a really good point here. The problem with an inflationary rise, the price does not go back down. You're so right. I mean, I can't ever remember the price of a product, especially food, going backwards. So that's a big problem. Brave man, good luck. Yes. I'm going for it tomorrow. Despite the sentiment on Zillow, you know, those people, the analysts, they get it wrong. And I think it's going to be okay tomorrow, but we'll see. How is Lloyd's doing? Lloyd's is doing well. It's up 109%, I think. Yeah, that's one of those stocks that sold too early. But, you know, taking profits is never a bad thing. I never really planned on holding Lloyds Bank shares for a long time. We bought down, here you can see at 25p. So it's been really good. Been a good performer. I love your stock picking. It is a little random. Yeah, I mean, generally it seems to be in the sectors that I'm interested in, energy or oil, which I think everybody will eventually rotate out of, because the oil price has actually fallen a little bit, but it's still right under 90 US dollars a barrel. From there, I think what happens, people rotate out of energy. They probably go to these more risk-off assets like gold. You know, maybe the SPY gold index or something like that. Maybe back into tech, because tech has actually gotten just absolutely crushed. I mean, if we look at where Magnite fell down to, which Magnite we used to be big fans of. We had owned this at 50 US, 45 US when we got out. You can see this stock has just absolutely taken a beating over the last year. This is where we got out, right? I think right here in the 48 range. Look at this. Cratered all the way down to 12, 10. I was thinking about having a little nibble at 10, maybe $10, but I don't think it's there yet. 75% over the last year. Crazy drops. But I think what happens is people will rotate out of probably oil and energy into tech eventually, but a lot dependent on what happens in March with these interest rate rises. Surprised that Putin would allow Bitcoin to legally be legal currency with him not being able to regulate it. There are some people that say Putin actually developed Bitcoin. I don't believe that, but maybe he did. That would make sense, right? If he was the actual inventor of Bitcoin, then there you go. Hence Russia liking it now all of a sudden. Just goes to show you what you read in the news. Can't always believe it. But I do think that's true. I think that Russia will make it okay. Mike Powell chucked a $5 in Zillow. Already 2p up. I told you, don't copy my trade. P-Land isn't open yet. I'm 852 in the queue. Brian says, I'm sure Lewis would sponsor the channel. Yeah, maybe. Send Louis an email and say, sponsor Lawrence's channel. Hey Lawrence, any take on dual asset mining? The rates are insane. I'm not sure I understand what you mean dual asset mining. Explain. You talk about like staking and things like that? Zillow dropping again. No. Zillow is now... Don't tell me that, Mike. Am I in the red? Am I in the red? No. Oh, God, we just went in the red. Mike, you jinxed it. Come on, Mike. You jinxed it. No, we're still in the green, £3. We're still in the green. I think this is going to be okay. I do. We'll see. No, we just went into the red. Ah! 72p in the red now. It's funny actually if you look at the oil charts today, some of these oil stocks. This is a one-day chart, so you can see here Vermilion started down here at 16, went all the way to 1673, and I was surprised. I don't know if this is when the inflation numbers came out, so that would have been 10. No, inflation came out around 8:30 a.m. US time, which would have been so 1. I had to count on my fingers there. Yeah. I think that this is what happened here. We saw those inflation numbers come out though, and then the S&P and all the oil stocks started going in the wrong direction. Maybe it's the traders. Who knows? Come on, Zillow. You know, if Zillow closes flat, this would have been the spot to buy. You know, I didn't buy down here today because I wanted to do it live on the stream, but I was going to buy in at about 48.65. So see what I do for the financial thing community. But oh, here we are with £2 in the red. But if it closes flat, close to flat, I'd be okay with that. Then we get the numbers at 5 p.m. US time, and we see what happens. I don't think these analysts know all the time what is going to happen. Maybe they do. We'll see. Taking a shot at it. Anyway, let's see what else. Stop watching it will go up. Invest 22. Have I ever thought about investing in whiskey? No, I have not. Not my thing. Don't understand anything about it. I'm not a whiskey drinker. It would be great if large profitable companies would partner with peer-to-peers. We increase investor safety. Yeah, I think large companies, they don't always think peer-to-peer is a safe place to partner up with. So it's considered a risky asset with the FCA. So it kind of puts it off the radar for most big companies, I think. It's a form of staking. Yeah, this is dual asset. I don't know what dual asset mining is. I mean, I've looked at staking. This is something I'll kind of cover a little bit more on Tuesday if you're interested. If you're interested in trying to get some yield on cryptocurrencies, there are some really good opportunities out there at the moment. This is one of them called Marinade. So anybody that owns Solana, which is one of the top 10 coins, you can get yourself 6.22% APY. right? So you stake it. They've got $717 million locked in, staked right now. But what they do is when you stake your Solana, so basically you're pledging it to Marinade Finance, and they go ahead and I think they lend it out. I'm not entirely sure what they do with it, but I have to research that. But what you can do is you get these, they give you these tokens called MSOLs, which are Marinade Sols. So you still have your Solana, which you can unstake anytime. You just go here and unstake it. But they give you these MSOLs, and you can take these MSOLs. So there's a little bit of a discrepancy. You can see down here, 1 MSOL equals 1.03 Solana. So you get a little bit less MSOL. You could think of that like loan to value, so you're getting a less loan to value. But what you can do is take those MSOLs, and you can stake it, provide liquidity to these other deregulated finance companies. It sounds crazy, I know. So you get to get your 6% over there, and then you could stake it, say here with Radium, which has got 26 million locked in, and get another 14.9%. So, you know, some of their returns you could get could be in the 20-25% range. There obviously is risk involved, but they do have some sizable amounts of coins locked in. So, for instance, Orca has $54.7 million of USDT, which is a stable coin. So you could take your MSOL from Marinade and then provide liquidity to Orca, and then get yourself more interest. As you can see, the APRs right here. USDT 13%, USDC stablecoin 27%. So a little bit complicated, but not that hard to figure out once you kind of get your head wrapped around doing it. But if you are somebody that is into crypto, again, crypto not for everyone, but you can get some pretty good yields, even just staking your Solana coins here for 6.2%. They pay you out in MSOL straight away. I know because I've done it. And then you could take your MSOLs for even a very, very low risk and get 1.77% if you just wanted to stake your MSOLs. So you could get your 1.7% here, and then you can get your 6.2. So close to 8% APR a year for holding a coin that you were going to hold anyways, probably. So you may as well get some returns on it. And again, you're getting paid out in MSOLs, which you can convert back to Solana coins at any time. And the good thing about MSOLs, they actually stay, I don't have the graph on it, but they stay at a fixed, close to a fixed price, but they raise up. If you're getting a little bit less MSOL than you are Solana, the way that they offset it is that price of the MSOL climbs up like that to, it basically has your APR wrapped into it. So this is why it's considered more stable, because it's not moving up and down. It's just increasing in value. So again, a little bit weird. We'll discuss it more on Tuesday. I'll show you how it's done if you're interested in getting some APR and some cryptocurrency. Something I do. 6.2%. Anyway, I think we're going to wrap it up. Money thing court case next Thursday. Oh, okay. Yeah, it'll be interesting. We're going to wrap it up. Thanks again to everybody for joining. I hope you enjoyed it. Please hit that thumbs up before you leave. And we'll see you on Tuesday if you're interested in more of the crypto and the stock stuff. We'll cover that on Tuesday, 7:30 p.m. Hope everybody has a wonderful week. Enjoy your weekend. Be safe. Be healthy out there. And we will see you next time. Oh, I'll be putting a new bike video up probably in the next couple of days, chatting about how much is your Starbucks really counting. The dog is here. Oh, she wants to say hi. There she is. It's the official hound of Financial Thing. yeah, a new video coming up about how much is your Starbucks really costing you over a period of time. So doing some more bike stuff. And I hope you're enjoying the content. Anyway, love every single one of you. We'll see you on Tuesday. Take care.